Welcome to Keys and Credit, your no fluff, no nonsense real estate and mortgage podcast. I'm Barb, your straight talking lender.
I am Bill, the no bullshit realtor.
Whether you're a first time buyer, seasoned investor, or real estate curious, you're in the right place.
You weren't even close to the microphone on that one.
Well, let's get to it.
So what are we going to talk about today? Okay, so I want to get into the self-employed type of lending, I guess.
Yeah, right.
People that...
Well, perfect. We have this program called it's a rate portfolio that can help, freelance people, self-employed borrowers.
1099 employees.
Correct.
Right?
That
Contractors.
doesn't fit into the cookie mold of, W-2 employees.
So this program, I want to talk about this one. We want to talk about this one. So this program, when you get turned down for conventional loan, FHA loan, VA loan, USDA loan, God knows whatever other loan, because you don't have a conventional job. Okay, you are a contractor. Your taxes aren't up to snuff or what they want to see for the past 2 years because you're a contractor.
You're writing stuff off.
You write everything off 6 ways from Sunday. We all do. We write everything down to zero because we can. That's the joys of being a contractor. If you're a 9-to-5 employee, this does not pertain to you whatsoever because it won't work. But contractors, business owners, LLCs, you name it, anything that isn't on a 9-to-5 status, they can use.
Well, we have many different options. We can use 12-month or 24-month bank statements and look at your deposits going in for your business. And we add those all up, divide it by 12 or 24.
So that rotates though, right?
Yeah.
So
let's just say it's a summer seasonal type employment. Let's just say landscaping.
Yep.
Okay.
Yep.
So in the summer, obviously they're going to make more money than in winter in Minnesota, unless they're plowing, but there's still going to be lulls, right?
Yep.
Because we have no snow in September, October, right? And grass isn't really growing much.
So that you want to use the 24.
12.
You want to use the 12?
You could do, well, depending upon how the deposits look, if you're going to do a 12-month or a 24-month bank statement program.
Okay. So say they have, that's what I was trying to get at. So if the summer was awesome, the winter was great, or the winter was terrible, summer was awesome,
we might do 24 then.
Do a 24, but you don't, decline them because of the winter seasonal work.
Correct.
Right? Because you can see through that. Now, with that program, do you need 2 years of current taxes?
Well, no, we're using bank statements, but you have to, be self-employed for at least 2 years.
Right. But you have to file taxes, but
you do.
You're not going to use those taxes for the pre-approval. You're going to use the money
in the bank statements
showing on your banks. With this, instead of using your taxes, instead of using the taxes that say you've made $7 last year, you can use the bank statements that show you actually made money.
Yep.
Right.
Yep. We don't. We look at your deposits. Another option within this program would be if you're a 1099, and we can use your 1099 either 1 year or 2 year, and then we take your 1099 income. So let's just say your 1099 income was $100,000. We divide that by 12, and then we have to take 10% less than that, and that's the income we can use.
10% less?
For your expense ratio.
Okay. All right.
Because you're going to write something off.
Right.
Likely.
Eventually. Yep. Okay.
Yep. So we have to take 10% less.
So when you close,
it's alternative documentation to prove someone's income versus W-2s.
Okay. So when we go to close that, say we get everything done, you use bank statements, we get to the closing table, it's funded, it's considered a regular mortgage once it's done.
Oh, yeah.
Right?
Yeah.
It's just the initial pre-approval process.
It's just what loan program you'll fit into. That's why we have many different loan types. So we can say yes more than we have to say no.
Absolutely. So when because I've been self-employed for 22 years, okay? And I just learned about this program last year, right? I mean, you've known about it forever. But we don't use the same loan programs for everybody all the time.
Right. So everyone's unique.
Yep.
So we got to figure out what program works best for you.
Yep.
And what will work to help you achieve your goals.
So what happened was someone came to me and said, hey, you know what? I need to buy a house. My taxes aren't ready. Or my taxes show that I don't make much money because I'm self-employed. Okay. I've written everything off. And I called Barb. I said, Barb, is this possible? And she's like, as a matter of fact, let me give you an education on what we do with self-employed and 1099 individuals.
Correct.
And that person was pre-approved
Right.
almost the same day.
Mm-hmm.
It's a little more complicated because you do have to give more documentation, right? And you have to prove it, and it has to stay consistent. So say you get pre-approved for this, and 3 months down the line, the bank statements have to kind of stay the same. You got to keep making money, right?
Right.
You can't just say, here it is, and then 3 months later be broke.
Right.
Right.
But it is an average over 12 months or 24 months.
Okay.
If 24 months is going to
make it better.
Make it better.
Make it look better. So, but anyways, long story short, that person was able to get into his house and move forward with life the way he needed to without all the crazy rigmarole of trying to submit taxes, explain write-offs, add back in deductions. I mean, there's 1,000 different ways you can add things back in when you're self-employed. But with this program, you don't have to do any of that crap.
No.
You just
It's easier.
do. It's super simple, right?
Yeah, less stress.
Okay, so does every lender have this option available to them? Or is it just rate?
It depends.
Does it?
I don't know what
I
other
haven't heard
lenders
of it
have.
from anyone else.
Oh, you
I really
haven't?
No.
Oh, well, it's our rate portfolio program.
Rate portfolio.
Mm-hmm.
Can we use that as a name? Rate
Yeah.
portfolio program?
Yeah, because it's our company's name, Rate, and then our portfolio program.
Oh, for fuck's sake. No, no way. See what I have to deal with all the time? All the time I got to deal with this.
I'm just helping you
Smartass.
along.
I'm just moving it along here, moving it along. So if somebody called a different local lender and said, hey, I'm self-employed, I want to get pre-approved for a mortgage, most of them will say,
If they're self-employed, like I can't speak to what they have, right? But not likely.
Most of the time it's no. If you go to a local credit union, if you go to, some of them are different. There's always an exception to the rule, but a lot of them don't have this option.
Right.
Right? They don't have the knowledge, the know-how, or they're not in the industry that we're in that deals strictly with this stuff to buy houses. They don't want to deal with it.
No.
They'll just say, you know what? We're not going to approve you. You can't get approved. Call back in a year when your taxes show you make some money.
Right.
You know? Whereas Barb hops in there and she's like, no, show me your bank statements. Show me you make money. We'll average it out. Guess what? Bill, go find him a house.
Go shopping.
Off to the races, you know? I mean, this is the stuff that we like to drive home when it comes to a good team,
Right.
right? Because stuff that I don't know, you know. I mean, stuff that you don't know, I'll know. I mean, I just learned about this last year. I don't know how I didn't know about this because everybody I know is self-employed.
Well, I know, right?
You know?
There's a lot of self-employed.
It's just crazy. So just because you're self-employed does not mean
You can't buy a house.
you can't buy a house.
There's
right?
options.
It just means that we have to get a little more creative, which is what we
Right.
do. And we do it on a daily basis, which we talked about last time, right?
Right. So is that all we have to talk about with
That's all we got to talk
self-employed?
about. That's it. We're going to call this a short little snippet podcast of self-employed homeownership, self-employed pre-approval. You don't need a regular pre-approval if you're self-employed. There's different options than just your tax returns.
Right.
Right.
Thanks for tuning in to Keys in Credit, where the only thing inflated isn't the market, it's your knowledge.
I like that one.
If you found this
like
helpful, share it with a friend or leave us a review. It helps us more than you know.
More than you know.